Hi, so this video is about what is Form 1099-R and how to enter it in a tax software. So we'll start with actually looking at Form 1099-R. So this is how it looks like. So what is that? It's actually distributions from pensions, annuities, retirements, and profit sharing plans as it shows on the form. And so what happens? Usually like people have a job and they contribute to their retirement every month from their paycheck or every 2 weeks, and those money go to their retirement account. And when they reach the retirement age, which is 59 and a half, they can start getting distributions without penalties from retirement account. So usually those distributions, they show on this form 1099-R under gross distributions, and most likely from normal traditional retirement account, they will be fully taxable. When the employee contributes to Form 1099, to their 401k or traditional IRA, it reduces the amount of wages taxable that year, and it also shows up under line 12. So under line 12, we have, for example, here we have deferral of employer contributions and employee contributions to 401k. So this is where it's showing up. So pretty much retirement contributions are deferral of taxes. So you don't pay taxes now, but pay taxes later when distributions are received. If you decide to get those money from retirement earlier, you need to pay penalty. Penalty is 10% of penalty is 10% of total distributions. And apologize, just trying to find it. So it says right here, so early distributions from retirement account, penalty is 10%. So let's say you're 40 years old and you contributed like some amount to your 401k or retirement account and you decided to take it out, you'll pay first of all tax on it plus 10% penalty. So let's switch back to Form 1099-R. So usually, unless otherwise mentioned in the details, it's a contributions to traditional IRA, Roth IRA, SEP IRA, or a simple account. So let me just explain you what it is based on what is the most common. So let's say there is traditional IRA. So what does that mean? A traditional IRA is actually, it is like 401k account. So we contribute money before paying taxes. It reduces our income that year, but then when we get distribution, we have to pay taxes on it. So it's pretty much is a tax deferral. Roth IRA is it doesn't have benefit when we contribute to Roth IRA, but we do get benefit later when we get distributions because it doesn't reduce our income. We pay the tax right away. And then when we get distributions, it's tax-free. So it sounds like, why would people do it? But in general, people do it if they, let's say, think the government spends lots of money and eventually the taxes will go up like in 20, 30 years. So they decided to pay taxes now on those money and just get tax-free distribution when they reach retirement age. Also, there is a SEP IRA. So SEP IRA is 401k for self-employed individuals. So if you have a Schedule C income, you can just open SEP IRA, contribute pretty much a significant amount of money to your SEP IRA account and make your taxable income lower. So another thing, let's say you made a rollover from one Roth IRA to another Roth IRA or from traditional IRA to Roth IRA or vice versa. So not all of those amounts should not be taxable. So usually when it's a rollover, and we know it's a rollover, the distribution code actually should show us a rollover, and the taxable amount should be 0. So what we need to do, we just check this box to be taxable amount not determined and enter 0 under 2A. Another rule is that is kind of important, that is if the taxpayer made not deductible contributions to retirement, they have to fill up this form 8606. And it's for non-deductible contributions to traditional IRA. And you think like, how is it can be non-deductible? So traditional IRA has a limits that can be deductible. I think it's a 6K this year, maybe 7K next year. So anything above of it will be non-deductible. So we have to include it in this form 8606. Also, if you got distributions from traditional IRA, SEP IRAs, and you have basis in those IRAs, what does that mean? It's like there is a fair market value in those IRAs. We have to fill up that form. Also, any conversion from SEP IRA to Roth IRA and things like that, we do need to fill up this form. So this is important. I'm going to record a separate video on form 8606 because it has lots of details, but just keep in mind, non-deductible IRAs or conversions, we need to fill up this form 8606. Also, another interesting thing is qualified charitable distributions. So what that means is, let's say you want to, you're going to get distributions from traditional IRA that year. So your income will be really huge, but you feel like you don't want to pay taxes, you want to pay less taxes. So what the taxpayer can do is they can contribute all this amount to qualified charities that can accept charitable donations. And by doing that, they will receive a deduction. So they'll have to include this whole amount here under taxable amount. Like let's say you got gross distribution of 100K, so you get so you include it in a taxable amount, but the distribution code here will actually says that it's a qualified charitable deduction, and the taxpayer can get a charitable deduction of that amount as well. So that's like a tax planning technique. Also, HSA works the same way. If the taxpayer need to put money into HSA, they can decide to put that year's required distribution to the HSA and also take a HSA deduction. HSA can be done once in a lifetime, but I'm not going to get into those details. It's just like a general idea. So that's pretty much all about what Form 1099 are. So now we're going to switch to how to enter it in the tax software. Let me know if you have any questions on this, and let's switch to tax software. Thank you for watching my video. Just a quick interruption. I'm sorry. Just to tell you that I do sell online courses. So if you go to my website, remotecpanla.com, it will give you more information about online courses that I sell and what I teach, and with more information about me, agenda, on what we do. We have a weekly calls. We go over the different kind of issues or problems we can have in a tax software. So in the end of this 1-month course, you'll be able to prepare like a complex tax return in any tax software you choose. Thank you again. Please continue watching my video. Hey guys, so I'm sorry to interrupt. I just want to tell you that I do sell the online courses on a different tax preparation. So if you go to my website, remotecpanla.com, it will give you more information about what kind of tax softwares I'm specializing in, agenda about our online course. And so we have like a weekly meetings. We like in the end of that course, you'll be able to learn to do like a super complex tax return in the tax software you choose. Thank you so much. Please keep watching. Hey, I'm sorry to interrupt you. I just want to tell you that I do sell online courses. Hey, I'm sorry to interrupt my video. I just want to say that I do sell online courses in different tax preparation software. So if you go to my website, Remote CPA in LA, it will give you more information about tax softwares that I'm specializing in, more information about me, and then content for agenda for online course. So it's a 1-month course, and we go over all topics that are here. And weekly we have our calls, group calls, and in the end of the course you would be able to prepare a complex tax return in the software you choose. All right, sorry to interrupt. Keep watching your video, please.